Hey guys, it's CJ Investing here. Welcome back to my channel. It's been a little bit of break. For me, I've been working a lot as per usual. Lately, I've just been hitting the gym about 2 times a week. But today, I just want to talk to you about the stock market and my perspective on it now, and what's been going on with me and my portfolio as far as like my Roth IRA, because that's pretty much all I got right now since I've been paying off, trying to pay off my credit card. So before I get into it, I need y'all to like, comment, and subscribe. I try to be putting these videos out more consistently. I hope everybody is doing all right out there. Let's get into it. So lately I've been pretty consistent with my buying as far as spot opportunities in the market and just buying whatever I see is down. I mean, that part of my strategy hasn't changed in the stock market, buying whatever is. I'm a value/dividend investor. Dividend investor meaning all of my stocks currently pay a dividend. I look for stocks that actually pay dividends. Not everybody will do that, but I do. It's just a personal preference. And even if it's a small dividend like a Google, a Meta, or like a small tech company, but I look for that just to be receiving something. Even if the stock goes down or it's in the red, I'm still receiving that dividend on a quarterly or a monthly basis. So I like that. That's just me. But lately I've been shifting towards more growth investing. And I find over time that my criteria for picking stocks, it gets more, I get a little bit more hard on it. Like I get more critique heavy on the stocks that I want. I'm a little bit more picky with them. So, I look at like high free cash flow, just to name some things. Of course, low debt, and a decent management team, and that their overall outstanding shares are decreasing over time. I want to see their share count going down when I look at their balance sheet. And I also want to see their debt levels going down if they have debt, which most companies do. Not all companies have the luxury of being debt free. There's very few in the stock market. Right off the top of my head, debt free companies are essentially very low debt. I think of Google. I think of T. Rowe Price. I think of this company called Paycom. Now, I've been in the Discord. I'm in a Discord chat. I talk to different people when I can, when I have a little bit of extra time. And I find that it helps me with my perspectives and just me investing overall. I think it's really beneficial. It can be beneficial to anybody that's in there because we learn from each other. We like a family. And I don't have a Discord myself yet, but maybe in the future. But Paycom, I've had that at the top of my watch list. So it's like a kind of see what their paycheck is, how much it is, and when it's supposed to be there, and making the adjustments, as well as like time off. If they need to have time off approved, it's easier for the manager to go in there and approve it through the app, and both people can do that. It's very accessible from what I've been explained to. So it's just making the overall businesses better. it's a very small company. It's under 10 billion. And normally I've been trying to stay away from them type of companies. They're very small cap because they tend to be higher risk. But I like this company. It may be the next company that I add to my portfolio. Now, in my portfolio, my positions dwindle down a lot. And I'll tell you why. As far as my strategy, I've been trying to concentrate my capital more into into my core positions that I love the most. And I think that's very important. I have at least 1,000 into each position. I have about 3 positions, maybe a little bit over 1,000. It's not a big deal. A very small portfolio. I have no problem with just holding 3 positions. I don't feel that I'm playing it risky. I really don't care. I can sleep well at night. I don't have to be diversified to sleep fine at night. As long as I'm invested in the companies that I know and I love, and I know that will do well long term based off of research, and I kind of know the company, I'm fine, and y'all should be fine as well. You don't have to be diversified in every industry. I disagree with that. But people have their own perspective. Say if you want to have a dividend portfolio, you're building towards something else, like having companies pay you out every month, several times a month, to the point where you want to live off of dividends. That may be a little bit different if you're trying to live off of dividends. But me, I'm not in that stage of my life yet. I'm still young. I still want to take risks as far as investing. Risks are fine. I think everything is a risk. Everything has some type of risk to it. You just got to know the company that you invest in. So my current position is Starbucks, which I've been buying a lot of that lately. What did I sell? So I sold VG Properties. I know a lot of y'all be mad at me because it's a big VG fan base out there. And it's a really great company. It's among the highest quality out of the real estate space as far as a REIT, a real estate investment trust. So it's among the highest quality. Margins are insane, 60% plus margins. And its tenants are high quality, triple net lease, meaning they place all of the responsibilities on their tenants. They're not responsible for anything. So them as well as Realty Income, I like them better. But the reason I sold was because I was just trying to get my capital into higher growth companies, higher growth plays, and companies that I thought were more undervalued at the time. So I kind of consolidated my portfolio. And I think it's better for me that way because I don't have a lot of cash to work with right now at this time period of my life. So I'm making do with what I got. I know a lot of y'all have a lot more, so you're able to invest a decent position into multiple different companies and be pretty satisfied with it, but I'm not. So I'm playing it this way. So I'm loving Starbucks. I've been buying Starbucks within the mid to low 80s. I would really prefer in the 70s. I think it'll be a really great value in the 70s and below. And I think it will recover. It has a strong business with its brand, its iconic logo. I don't think Starbucks is gonna go away anytime soon. I don't think you'll have to worry about that. It's a top tier coffee chain. I was listening to this Howard's interview, the guy, the founder of the company, and I was just so impressed by his story. It was like interesting. Just hearing him speak. I could listen to him speak for hours. He was just so down to earth and entertaining. He was there on the Acquired network, the Acquired YouTube channel. So yeah, I listened to that. It was about 3 hours. But I listened to the whole thing, while I was cleaning. But I think Starbucks. Okay, so one of the only issues I have with Starbucks, I said it before, is the debt. I invested it mainly because of the brand power. I believe that it will recover that strong brand. And when I think of Starbucks, I don't go there at all. Like, I maybe went to Starbucks maybe a few times back in probably like 2018 or something. It's been a while. But I don't drink coffee. That's probably why I don't go there. But I understand it's a great brand. It's in partner with Target. I was in Target the other day. I seen Starbucks there. Just genius marketing, by the way. Genius management. I like seeing things like that. As far as management partnering up and knowing their clientele. I think that's pretty smart. They both go after the same audience, women. And while the women are shopping in Target, they can go to Ulta or they can go get some Starbucks. And while I will agree Starbucks isn't as busy as it used to be, I don't think, from when I went. Well, I haven't went in the morning. I know a lot of people go for their coffee, but from what I've seen, it's not as busy as it used to be. I think it's gonna be around. It's gonna have no trouble. But I think of Starbucks, I don't think of debt. Like, I don't think Starbucks should have debt. I feel like it's too clean of a company, too clean of a brand when I think about it to be having debt. And that goes the same with like companies like Apple, Amazon, some of these other companies. I'm not really sure if Amazon has debt or not. But I look at those companies and I say to myself, they shouldn't have debt. They just their overall presentation. I don't get that from that. Like a sloppy company will be having debt, like I would see with a utility company like a Nextera or Duke or oil company or telecommunications company that's known for debt. I don't know Starbucks for debt. So that was surprising when I first looked at the balance sheet that it had the amount of debt that it did. But I overlooked that because I really like the brand. And also some people in Discord kind of convinced me through their arguments and their own beliefs. I think it's one of the best plays in the restaurant space. I also like Texas Roadhouse, and I like McDonald's. McDonald's is near its 52-week low for anybody looking to enter McDonald's stock. It's very close to its 52-week low. I think it's within the 250 range, 240 range. I can't quote off the top of my head because I'm doing all this off of memory. I don't have anything out in front of me. So that, I think the Hershey's chocolate company also hit its nearest 52-week low again It went up a few months. It was at its 52-week low last year as well, I remember. But that's one to look at. And Starbucks. So back to Starbucks, it has a good return on invested capital, ROIC. I was looking at a historical range, and it stays within the 20%, 30% returns, and that's good. That's pretty good. You know, they just have to work on that debt. Decent free cash flow. It's kind of up and down. So my next company that I own is, of course, T. Rowe Price. What can I say about T. Rowe Price? It's a clean company. They have over, I don't know how much is it, like 1.5, 1.0, 1.6 trillion assets under management. You know, it fluctuates with the market because they're a company that's very tied to the market as far as they're in the retirement, financial space, as far as managing people's money, their portfolios. They have their list of ETFs, which I think will be more popular going into the future. I think like older people, you know, they don't want to have to worry about investing, doing this type of thing that we do as retail investors as much. They just kind of want to let somebody else do it. So that's kind of my play on that. And T. Rowe Price also has, as I've said before, one of the best balance sheets in the industry, in the stock market. Decent free cash flow, decent returns. These are all the things that I look for whenever I'm looking for investment. Return on invested cash flow or invested capital, return on assets. I look for all of these things. I want to know that it's cheap, a low PE, price to earnings ratio, low price to free cash flow, low price to book value. I want all those to be low. Preferably, like a lot of times, I want to get in the single digits with those metrics. But so T. Rowe Price, I think it's my third largest position. My second largest is Starbucks, and my number one position is, of course, Visa. My favorite, my highest conviction stock. I mean, it needs no exclamation. Y'all know what Visa is. Y'all know its competitors, MasterCard, American Express, Discover Financial, even though that's like, I consider that more bottom tier. The only company that I would trade Visa for is MasterCard. But other than that, my cost average is too good on Visa. I'm not getting rid of that. My cost average is like 227 because I've been averaging. It was lower than that. You know what I'm saying? So I've been averaging up on that. And the only company that I'm willing to average up, and I'll be up almost $100 on, it's insane. But that's the power of Visa. Visa, its returns like double digits across the board. ROIC, I think it's like 30 or 40%. That's insane. MasterCard is even crazier than that. It's a little bit more growth. I own Visa cards. Just about all of my cards are Visa except for one. I got American Express, which is a great company as well. But I'm not trading Visa for that. You know, it grows its dividends at double-digit rate, pays a dividend yield under 1%. Plenty of free cash flow. My gosh, these type of credit card companies, their free cash flow is like out of this world. Like they produce more free cash flow than some companies produce revenue, like total revenue. Like it's insane. They have no big expenses like that, and I love that. These are the businesses that you want. Growth companies with a dividend. And Visa and MasterCard are may be the perfect stocks in the stock market, along with like Microsoft, maybe Meta and Google. These are the perfect. Like, you can't get more perfect than a Visa or a Microsoft or a MasterCard. They're like the golden standard, and you can't really find too much wrong with them either. They're just beast. You really can't ask for more. So if you don't own one of those, you're doing yourself a disservice in your portfolio, because the returns are insane. They go up. They very rarely go on sale or go down. They just keep going up. Even in a market downturn, they don't go down like a whole lot. That's probably the only time you'll get these companies on sale, unless something really bad comes out. Then it might dip, and by the end of the day, it'll be up again. You can't stop these trains. They just keep on going. You know what I'm saying? So those are all my positions. That's what I've been doing lately, purchasing $20 increments on a weekly basis. I urge all of y'all to be consistent with your purchases and your strategies, and just to think about it with whatever you do. Don't sell or trade emotionally. It's long-term strategies. Visa is my longest position. Almost 2 years. It'll be in November. I've been holding it. So I'm pretty proud of that. I'm trying to get what they call those diamond hands. I've been having the paper hands the last year. So I'm working towards diamond hands, all right? So I appreciate y'all for watching this whole video, sticking through. I wish y'all the best of luck with y'all investments, and keep getting those dividends, keep getting those gains. I love y'all, appreciate y'all, and I'll catch y'all on the next one. So peace.